Hello friends. Welcome back to Investment Professor, where real investing meets real results. I'm AK. Today, we're breaking down a strategy used by one of the greats, Linda Raschke. If you haven't heard of her, let me tell you, Linda's been in the game for decades. She's not just a trader, she's a market wizard, one of those rare individuals who's consistently made millions over her career. And the best part? She's done it using a strategy that's surprisingly simple but deadly effective. Yep, just one. Disclaimer: the information presented in this video is for educational and entertainment purpose only and is not a financial advice. I am not a financial advisor. Trading can result in financial loss of funds. Please take this information and do your own research. So you might be wondering, how did I come across this? Well, I've always been obsessed with learning from the best. Whether it's legendary traders, hedge fund managers, or the pros who have truly walked the walk. After diving deep into Linda's work, I realized that while her strategies seem basic on the surface, the magic lies in how she uses them. And today, we're going to unpack one of her go-to moves that she calls the anti-setup. You're going to want to stick around for this. It's a game changer. By the end of this video, you'll have a clear step-by-step breakdown of how to use Linda's method in your own trading, no matter what market or time frame you're in. Stocks, crypto, forex, you name it. You'll understand why it works, how it works, and the exact rules she follows to consistently pull in profits. Let's get into it. So let's talk about this anti-setup strategy. If you've been trading for a while, you've probably heard a lot about trend following, but Linda takes a different approach here. She's looking for trend reversals, specifically after a pullback. Here's the key idea. Markets are cyclical. Prices don't move in straight lines. They go up and down, and within those moves there are pullbacks, which are basically temporary reversals within a larger trend. Linda's approach is all about capitalizing on these pullbacks at just the right moment. She uses the MACD indicator in a way that most traders overlook, and that's where the real power of her strategy comes in. But wait, I know what you're thinking. Another MACD video? I've seen a million of those. Trust me, Linda uses it in a way that will blow your mind. She tweaks the settings, gets rid of the histogram, and follows a completely different set of rules. Once you see it, you'll never look at the MACD the same way again. And guess what? I'm about to share everything with you right now. But if you're not familiar with MACD, no worries. I'll explain it quickly. The MACD is a trend-following momentum indicator that shows the relationship between two moving averages of a stock's price. Typically, it's used to identify changes in the strength, direction, momentum, and duration of a trend. But here's the twist. Linda modifies the MACD settings to make it more sensitive to smaller price movements and to spot those crucial pullbacks. Let's dive into those settings. Fire up TradingView. This is where we'll be setting up the chart. If you don't have an account yet, there's a link in the description to get started. Once you're logged in, add the MACD indicator to your chart. The default settings won't work for this strategy though, so here's what we're going to do. Fast length, change this to 3. Slow length, set this to 10. MACD length, adjust it to 16. Signal line MA, simple or SMA. And finally, turn off the histogram completely. I am changing the MACD line to red and signal line to yellow. It's completely personal preference. We only want to focus on the MACD line, which will be red, and the signal line, yellow. Now that we have the MACD set up, let's talk about Linda's rules. The first thing she looks for is a price pullback within an existing trend. Essentially, we're looking for the MACD line, the red one, to make a new high or low, depending on whether we're looking to go long or short. Let me show you on this chart. We're looking at MACD on a 1-hour chart. And right here we have a solid upward trend. The price starts to pull back, but notice that the MACD makes a new high right here. This is our signal to start watching closely. Now we move to the next step. The MACD line needs to break above its previous high for a long trade or below its previous low for a short trade. That's step 1. In this example, we're going long, so we see that new high forming here. Got it? Great, let's move on. Next, we want the signal line, the yellow line, to be moving in the same direction as our trade. If we're going long, it needs to be pointing upwards, confirming the momentum. As you can see here, the signal line is sloping up, so we're good to go. Finally, we need the MACD line to cross or revert back towards the signal line, with both lines starting to diverge again. This reversion tells us the market is hesitating and could be ready to resume the overall trend after the pullback. At this point, we're ready to enter our trade. Now, as with any good strategy, we need to manage our risk. In Linda's case, she suggests placing your stop loss just below the recent swing low for long trades or above the swing high for short trades. For your take profit target, aim for the previous high or low, depending on the direction you're trading in. Here's an example. On Bitcoin's chart, we see the MACD making a new high, the signal line is sloping upward, and then the MACD reverts back to the signal line. Textbook setup. I place my stop loss just below the pullback, and I aim for the recent high. Boom, the trade plays out perfectly. Look at that. Set my take profit target to the recent high, and boom, nearly 58% profit. Now, if you're someone who's up for taking a little more risk, you could hold onto the trade by adjusting your stop loss or averaging it out. And wow, check this out. 82% profit. Can you show me another strategy that delivers these kinds of gains? That's the power of the MACD right there. Let's quickly flip the script and look for a short setup. We're looking for the same steps in reverse. A new MACD low, a downward sloping signal line, and the MACD reverting back to the signal line. Here, we see the pullback, the MACD makes a new low, and we set our stop loss just above the swing high. Another winning trade. But hey, it's not always smooth sailing. See how we almost hit the stop loss here? This is exactly why risk management is so important. Still, look at that take profit, 24.55%. Now, like I said, if you're more of a risk taker, you could hold it with solid risk management. And when you do, just look at that, nearly 49% profit. That's what happens when you play it right. And there you have it. That's Linda Raschke's anti-setup strategy using the MACD, broken down into clear, actionable steps you can start using in your trading right now. I've tested this strategy myself, and while it works a great percentage of the time, remember, no strategy is foolproof. You'll hit some losses, but with the right discipline and risk management, this strategy can help you find high probability setups in trending markets. The beauty of this strategy lies in its ability to find high probability pullbacks in trending markets. If you're finding the MACD useful, you might want to check out my other video where I combine the Bollinger Bands with RSI for even more powerful signals. And if you're curious about how AI is revolutionizing trading strategies, I've got a deep dive on AI in trading that you won't want to miss. Both of those videos will help you take your trading to the next level. Check them out after this one. If this strategy gave you a new way of looking at the MACD, or if you want more breakdowns like this of top traders and their methods, keep coming back to the channel. I'm here to help you grow your knowledge and skills in the markets. Thanks for sticking with me throughout this video. Now it's time to put what you have learned into action. Take notes, learn from it, and succeed. Let's grow together. Drop your questions or thoughts in the comments below. Thanks for watching, and I'll see you in the next video.